Bitcoin just broke the $120,000 mark for the first time. And suddenly everyone's watching. Newcomers glance at the price and think, I'll never be able to afford a full Bitcoin. But what if I told you you could? What if before you turn 50 you could own an entire Bitcoin? Not a dream, not a meme, a real financial milestone within reach, even if you're starting from scratch. In this video, I'll show you 3 powerful strategies that could help you accumulate one whole Bitcoin sustainably, realistically, and without gambling. This isn't about hype, it's about discipline, consistency, and making volatility your ally. Let's get into it. Let's start with a classic dollar cost averaging, or DCA. This strategy means investing a fixed amount of money at regular intervals, regardless of price. It's simple, boring, and brutally effective. Why does it work so well with Bitcoin? Because Bitcoin is volatile, wild swings, emotional headlines, even experienced investors get rattled. But with DCA, you take emotion out of the equation. You buy on schedule, rain or shine, high or low. Over time, this smooths out your average cost. No more guessing tops and bottoms, no more should I wait, just consistent accumulation. And the best part, it's psychologically bulletproof. With an automated DCA plan, you're less likely to panic sell in a crash or FOMO buy at the top. It becomes routine, like brushing your teeth, except your savings grow. And that growth? Thanks to the magic of compound interest, even small monthly contributions can snowball into real Bitcoin wealth over the years. Plenty of platforms now offer automated DCA tools, Bitpanda, Swan, Relay, you name it. DCA isn't flashy, but it's a cornerstone strategy. And for many, it's the difference between wishful thinking and actual ownership. Next up, the high-risk, high-reward cousin of DCA, buying the dip. Simple idea. When Bitcoin crashes, you pounce. You get more BTC for your money, increasing your long-term stack faster. Sounds easy, right? But here's the catch. Timing a real dip is hard. Markets are noisy. And what looks like a juicy minus 15% drop could actually be the start of a brutal bear phase. That's why smart dip buyers prepare ahead. They set aside dry powder, a cash reserve, specifically for dips, ready to strike when fear is high. You can't predict dips, but you can be ready. And if you manage to scoop up Bitcoin during a minus 30% crash while everyone else is panicking, that's how you make serious progress. Just remember, this strategy takes nerves of steel and strict rules. Know what qualifies as a dip for you. Decide your entry points before emotions kick in, and never go all in just because Twitter is screaming buy the dip. Combined with your regular DCA plan, strategic dip buying can accelerate your journey toward 1 BTC. It's not easy, but it's a powerful edge if you can stomach the blood. The one-time investment. This means converting a chunk of your long-term savings, stocks, bonds, even real estate, into a single sizable Bitcoin purchase. It's not for everyone. But if you're sitting on underperforming assets, or you believe in Bitcoin's future more than your pension fund, this could be the move. Let's say you sell a €50,000 stock portfolio and buy Bitcoin during a correction. If Bitcoin then jumps 20%, you've just made €10,000 in unrealized gains. Had you DCA'd that 50,000 over 12 months, you might have missed much of the rally. The upside of a lump sum? Maximum exposure, maximum reward, but of course higher risk too. If the market drops 30% right after you invest, you'll feel it hard. That's why many investors use a hybrid strategy. Split the lump sum into 3 or 4 big tranches over a few months. You still get exposure while reducing timing risk. Whether it's stocks, bonds, or a second apartment, make sure your source of capital is something you're willing to let go of in exchange for the hardest money on earth. You don't have to pick one strategy. In fact, the strongest approach combines all 3. DCA gives you consistency, dip buying adds speed, a one-time investment brings power. Used together, they create a diversified layered plan, less guesswork, more results. The road to 1 Bitcoin isn't reserved for whales or early adopters, it's for those who commit. With time, discipline, and a clear strategy, you can get there. Before 50, before 40, maybe even sooner. But only if you start now. So, what's your plan? DCA, dips, lump sum? Drop your thoughts below and let the Alpine Hodler crew know how you're stacking. And if you're serious about building real Bitcoin wealth, tap subscribe and join the movement. Because here, we don't just follow the price. We understand the mission. This is Alpine Hodler. Let's ride.